Hi, I'm Tom Hoskyns, editor of Mining Journal. I'm here with Stefan Kreis, Vice President for Finance at Veragold, and Richard Lloyd, CEO of Minexia, and also a board member of Veragold. Stefan, you spoke to us about 6 months ago last time. You told us about your Mina Santa Rosa project in Panama and your innovative financing methods. Clearly a lot has changed in the world with COVID. Maybe you can give us an idea of whether you've been affected and how project development is progressing.
Yeah, sure. Hi, Tom. But first, thank you for the invitation again. Yes, how did COVID-19 affect Veragold and the project and the forthcome in it? Effectively, Panama is shut down like most of the other countries throughout the world, so we have been forced to put the drilling program on hold. The drillers haven't been allowed to stay on the site, as well as our workers for the construction. So obviously there is an effect on Veragold. On the production side, we're rescheduling everything right now. Up till today, we don't have a big delay, but nobody knows when Panama will open up, like Europe and all the other states that are affected. So we have to wait effectively till we know for fact when we can start over with the construction work, with the drilling. That's where we stand right now. On the other side, what happened in between is we did a lot of work on the social responsibility stuff. Again, we put new numbers together. We're working on a new 43-101, which was case when we spoke the last time already. There has been significant changes. And besides that, as bad as it sounds, but gold worked pretty much in favor of our bond with a gold price roughly at $1,700, $1,800. So that's great for us. So we're affected, yes, but mostly during the shutdown, we did a lot of work which we had to do either way.
Okay, great. Rich, maybe you could talk a little bit about progressing the 43-101.
Yeah, as you know, these documents are ever evolving. They continue to grow with you as your project grows. So the latest sort of resource and reserve numbers we have is we've got a measured and indicated resource around the 1.2 million ounce mark. That's just the gold. None of the silver is actually taken into account in any of our modeling or indeed our financing. So that's sort of extra layers on top, if you like. And then of the 1.2 million ounces, we've got just under 800,000 ounces of proven and probable reserve. So that's quite a significant change from when we last spoke to you. And that's just that's detailed scheduling. That's a better understanding of the timing and the value of each little block, as you have to do within the modeling when you come up with these numbers. As Stefan says, there's a lot of kit has already arrived on site and construction has commenced, but there's a lot of kit waiting in port. And likewise, the drilling, whilst we've identified intersections both outside the pit envelopes and below the current pit envelopes, which we hope will increase our overall resource. There's assays that we haven't actually been able to progress yet. And we've also picked up the license at Romance as well, which is our second project. So there's lots ready to go. And there's, we haven't wasted our time. We've progressed financing discussions whilst this COVID issue has been running, and also looking to deepen our knowledge on the environmental base case and the social side of things, as Stefan said.
Great. Stefan, maybe for people who need to be brought up to speed, can you just talk about this bond, how it's structured and how sales are going?
The bond itself has a pretty straightforward structure. Every debenture is linked to a physical ounce of gold. This being said, when we created that bond in 2019 in March, we had a gold price of €1,150, excuse me. And so whatever price is higher, the accumulated minimum interest of 5% or the development in gold price from 1,150 to wherever it is at maturity will be paid to the bondholders. If I look at it at the gold price today, which is around 1,500, nearly 1,600 euros, the gold price is the valid number. So we're still, and we progressed, and we are way higher than the 5% accumulated interest with the development in gold price. So everybody can make a very good return because the gold price raised that much from 1,150 euros when we brought out that bond. That's the first option. The second option is for institutional investors, and that might be even the bigger thing. They can get a physical redemption too. So in exchange for their debentures, they can get their hands on the physical gold. And that's even more attractive because for the big institutionals, we're then talking about €1,000 of gold per ounce. So that's the whole story in one sentence. It is a forward sale, which is in a bond, which is packed into a bond structure. That's all it is, in a sense.
And I guess, Tom, you're also seeing there's a bit of a flee from fiat currencies and the US dollar, etc. So you're seeing a lot of people trying to put their wealth into physical assets at the moment, and this is an ideal way to do it.
Right.
Absolutely.
You've been asked how the bond is requested, and I think you just saw it. We get a lot of interest from institutionals, from family offices who clearly figure out that they have to have physical gold now in the time of uncertainty. So we think with our instrument, we created something that is really valuable for family offices and institutional investors. They have to get into physical commodities now, and gold is very stable, and we all know that fiat currencies are losing trust all over the world.
Great. And Rich, I gather there's been some promising developments on the financing side as well. Can you talk a little bit about those, please?
Yeah, I think when you've got I mean, this all started due to the stockpile. So we have 122,000 ounces in the stockpile with a all-in sustaining cost of sort of $350 an ounce. So that's very attractive. And actually, the mine as a whole is in the low 700s. So it's an eminently financeable mine. It's a very simple mining process. It's relatively simple, flotation circuit in the processing as well. So there's nothing really out there that scares potentially financiers in that. And because of the bond structure as well, that's created interest in of itself. And we have progressed finance discussions with one of the well-known mining PE funds. They love the innovative bond structure. They will be subscribing for a good chunk of that as part of a diversified financing structure, which is going to include the usual, streamings, gold prepay, etc. So you can blend the financing. Some is short period, some is life of mine. So that's what we're working on at the moment. So whilst the COVID situation may have stalled slightly any project development and drilling, we've been working feverishly on the financing side and on the environmental and the social responsibility side, and making sure, because we know the due diligence that is required by these financiers. So we preempted that and got most of that already squared away, and at least a development plan for areas that we haven't quite worked on yet. So yeah, but I guess one of the whilst there's the upside on the COVID-19 has been the gold price for us and has benefited the bond, and certainly the bond sales. The one issue we're going to have, and that's the big unknown that Stefan and I are deliberating, is how long is it going to be before consultants can be on site to do the due diligence for example, finance partners. And that's going to be a common theme across the entire industry, not just gold, not just Panama. So it could be iron ore in Australia. And that's something people are going to have to deal with. And I think as we're doing these sort of remote interviews as well with you and using technology for the interviews, again, I think there's a space there for more GIS focused or remote work in the environmental space. And indeed, we're talking to one group on how to assist us from doing a baseline study from, let's say, 10 years ago and working up, and based on all sort of remote data, which you can do in these situations.
And Stefan, what are going to be the first things on the checklist to do when you can get feet on the ground?
The first thing we have to finish, we immediately go on with our drilling program. Reason being is because we have to update the numbers. We have to get the numbers for the 43-101. And we know from the first assays we had at the labs, we know that we got drill cores 100 meters below the former bottom of the pit, still in mineralization. So we have to figure out how much the resource will increase. That would be the very first thing we do. Secondly, we have to get consultants on the side to close the financing. And third, we have to ship the equipment that sits in the United States and in Canada right now to Panama. And we're just waiting for the borders in Panama and in the United States and Canada to open up, that we were able to ship the equipment that is ready, sitting there in the port, to be shipped to Panama, and we can go on with the construction to keep in our planned time frame to get the mine back into production. So there's a very strict plan of what we have to do, and most of it is related to when are the borders open and when can we start. We're prepared, we're sitting here and waiting for the moment that we can push the button and get everything rolling again.
Okay, great. And Rich, there's, I mean, we've talked about obviously the gold side, which is the main focus, but there's a silver part of the story as well. Can you tell us about that, please?
Yeah, the silver ratios in the pits at the moment, and the work we've done in the reserve, it's about 4.5 to 1 ratio. Obviously, the silver price is a lot lower than gold price, but what we've done is we've not taken that into account in terms of our financing or our cash flow. So, and it's totally unencumbered. So the silver is almost a free carry, if you like, and it accounts for between 5 and 10% of revenue. So that's a bit of upside there. Obviously, Veragold at the moment isn't listed, but there are plans that potentially in 4 years' time we may list the company when we have upward of 2 million ounces in resource. We probably have a couple of projects up and running, and at that point we don't want to be a single asset company. There's enough of those on the exchanges at the moment. And as I mentioned earlier, and Stefan alluded to, we have Romance, which is our second project that's just coming online. We've got all the licensing now, and that's a very high grade gold copper system, about 25 kilometers to the east of Santa Rosa. That was running with a cutoff grade of 3 grams per ton. Most open pits, their average grade is 3 grams per ton. So this one was running with a cutoff of 3, on average about 6, and a top cut of 25 grams per ton gold. So we've got a lot of work to do there as well. There's about 200 holes, 5,000 meters of drilling. A lot of it we need to confirm and double check, and then do our own drilling program on that as well. But that'll be geochemistry and metallurgically is a slightly different system with the copper in there. But that's very exciting, and I think we've got about 6 or 7 brownfield sites as well that we're assessing to see which one we tackle first after that. So that'll be project 3 and 4 as we move forward.
We're working already on the next innovative financing structure for Romance, because that is the second thing that will come up. So there'll be more to talk about in the future.
Okay, great. Well, thank you very much, guys. It sounds like a really exciting next year ahead for you guys. Look forward to catching up in due course. Thank you very much for joining me.